You're now listening to Cashed In.
Welcome back to today's episode of Cashed In. We're episode 14, and today we're kind of winging it. We don't have a guest today, so we're kind of going back, retrograding to what we used to do before our first guest. Michael and I were talking on the phone before we got here about what should we talk about, right? The hottest topic right now in real estate, I think, would be either interest rates or the crash that's supposedly looming among us. Michael, I'll let you speak first on what you think about interest rates.
Yeah, so it's kind of a double-edged sword, right? So, rates have to, the Fed has to adjust rates in order to counteract so many different economic factors that are really could destabilize the entire economy. Not only just this economy, but globally. Mm-hmm. And, so inflation for one, the adjusting rates is one of the biggest tools that they could use to counteract that number, which it doesn't seem like it's doing much. Inflation's creeping up near 10% right now. In comparison
to last year, you mean?
In comparison, right.
Yeah.
Right. So, normal 2 to 3%, obviously, we're in unprecedented waters right mm-hmm. now, at least for, when you compare it to the recent past couple of decades. But the key is, as it relates to real estate, for me, there's two factors, right? From an investor lens, I've said this many times. Interest rates are not a deterrent for me if it's the right property. If a point or two is gonna make or break your deal, then it's probably not the right property to buy. Mm-hmm. Now, is it going to squeeze your margin a little bit? Absolutely. But if it's the right property in the right market, I'm really unfazed by it. Now, having said that, I think that with rates going up, which I think right now, the average rate across the board, not necessarily for investment. Rates in December, I saw a statistic, rates in December, were around in the low threes, 3.1. Mm-hmm. So if you have a $500,000 property, your P&I is going to be roughly $2,100 and change. Right now, as it sits, a little in the low fives, that number's jumping up near 3,000, right?
Yeah, I'm looking at it for today. It's 30-year fix is 6.1% on a home for owner occupant. Yep.
Yeah, that's high, but yeah. I think that's going to do is that hopefully is going to kind of throw water on the home values. I would hope that would be the case. Mm-hmm. To try to slow that down, try to slow it down a little bit and drive values down a little bit more, which would increase inventory, which would kind of stabilize everything. Now,
yeah,
what have you seen from
It's definitely throwing water on buying power. So, for instance, if someone was buying that same home for $500,000 in January at a 3.1% interest rate, they could afford it essentially at what you mentioned. What do you say, $2,200?
Yeah.
So now that to get that $2,200 a month payment, they might have to buy something at $425. So it weakens the buying power. It affects the spectrum of buyers that need to borrow money in order to purchase a home. So we're already having an inventory crisis, right? That's what the crisis is. It's not a mortgage crisis like in 2008. It's an options crisis. It's an inventory crisis. People are searching for homes. They need to upgrade or downsize or whatever, and what they need is not available at the moment. So I guess I don't know what their strategy is. This is all speculative, but why would they target the margin of people that need to be able to or need to get a loan in order to buy a house? To me, that's where my red flag goes up is why are they raising interest rates? To throw water on this craze where everybody's buying property, but people need the homes. It doesn't affect people who have cash is what I'm saying.
Yeah, I think that the fear isn't necessarily when you look at a lot of the issues that stemmed in 07, 08, there was a zillion underlying issues, but household income in comparison to their mortgage rate was significantly higher, and you had higher risk loans. You had people that had no business getting a $500,000 loan.
Yeah, it was predatory lending. Yeah.
And now
there's so many regulations are in place to
right. They passed Dodd-Frank, and now a lot of those issues
it doesn't repeat itself.
Aren't there.
Yeah.
Right. So now you have individuals where the current homeowners, that's not really the issue. Now you have this new wave of homeowners that are coming in, and they're buying property at an inflated value with a higher interest rate. So now that's and then on top of that, you also have, gas prices up over 20%.
Yeah.
You have your
Everything
poultry,
is up.
everything across the board is more expensive.
Yeah, it was up 8.5% since last year, in
Right.
in the month of March. But it doesn't. The pay rate or the
wages.
the income
Right,
does
yeah, right.
not correlate with that. So there you go. You have to get gas. Can't really afford to buy, the $500,000 house you want right now to live in the city or whatever. It all relates to each other.
Right.
So I guess they're trying to slow down the buying craze. The powers that be, are trying to slow down the buying craze. I don't understand it because it doesn't promote home ownership. Because now it's, okay, I got to stay in my rental because I can't buy the house that I need in the condition I want or the location I want because the interest rate doesn't help me anymore.
Right. And it is, more complex than I understand. I mean, the home ownership is just one aspect of it, but the reality is, they need to get inflation under control, and as it relates to real estate, you're going to have properties that we were just talking, you have properties that are sitting on the market a little bit longer. So eventually
yes.
I would imagine that listings are going to have to start to slowly come down. Sellers are going to have to take a little bit less. As it sits on there longer, you're going to have more people trying to list their properties.
It might
right?
only sell for what it's worth versus
Right.
what it, versus the competition to win a bid.
Right. So yeah. So I know that we've talked quite a bit about it, but I don't know what your experience has been over the last even couple months. I mean, has things slowed down?
I've definitely felt it. For instance, in terms of being a listing agent, which is my role, switched from being a buyer's agent to more of a listing agent all of last year, which was wonderful for me as an agent. It was very easy to sell property. I listed it, and the buyers would just come. Now it's I listed a property, and if I don't have an offer within the week, it's almost like, oh my God, we have to reevaluate. Versus
Sellers get nervous too.
not so much them, but it's more me, just because I'm in the market every day, experiencing like listing a house, move-in ready, okay, sold in a day. Whereas, for instance, I just listed a property that we were talking about, and I listed it last week, and it wasn't even a week. I think it was Wednesday. What's today? Monday? So it's less than a week, and I don't have an offer yet. And in the back of my mind, it's kind of like, oh, wait a minute. This is unusual. This house is move-in ready. This is a great location. Price is a little bit inflated because why wouldn't we try that? Because the whole market is inflated in terms of our asking price. She doesn't need it to move, but why wouldn't we try to get more? But it hasn't sold yet, and normally that's normal. That's okay.
I was going to say that's historically regular. I mean, what was the average
days on market in that location was probably 60 days. Right. So the fact that it hasn't sold in 5 is okay, but. Just following suit with trends that I have dealt with in the last year in real estate, the fact that it didn't sell within 5 days kind of raises a red flag. I'm like, okay, things are changing because there's no reason this property shouldn't have sold unless what happened? What was the trigger event? The interest rates went up last week.
Yeah.
From 3 to 6.
Right. These people they're getting pre-approved, and they're trying to find a house or waiting for a house to come onto the market. One comes onto the market, they talk to their broker or their lender, and their lender says, hey, what, I'm sorry.
Yeah.
Rates they went up another quarter point, another half a point. And now instead of having a payment that's, $1,000, now it's an extra couple $100 more.
Yeah.
And they're like, wait a second, I'm spending a couple $100 more a month on gas. Yeah. For me to buy a pizza, it's costing me more money. So they're factoring in their overall lifestyle. And quite frankly, I think that it's affecting people, the airline industries, for example.
Oh, God.
People aren't there, even though you go to the airport, there's a zillion cars.
It's chaotic at the airport right now. They, I was watching the news. They canceled 150 flights a day just because of understaffing.
Insane.
So that's annoying, but
insane. Yeah.
Yeah. To try to operate in 2 states, try to sell in 2 states. Now it's more money for me to travel and stay places and whatever.
Right. It's a bigger write-off.
It's everything is going up except the income, so it doesn't help in terms of buying power, is what I'm observing. I'm not an economist. It's just what I'm observing from my end.
Yeah, and again, I think to bring it back around to what effect I think this has, I think it brings it should bring values down. I mean, common sense would say that it would bring values down
Yeah.
because people can't afford it at 5, so they could afford it at 4, so they're just gonna wait.
Yeah.
But I was just reading a Zillow article today that they're expecting over the next year that home values are going to be up another 15% over the next year.
Did they give a demographic on that? Meaning, they give an area, like what cities?
Zillow didn't. That was like more of a national number. But there were other. I think it was CoreLogic had said that. Like there were markets that they considered 65% of markets, metropolitan markets over the country were they deemed overvalued. And that they actually threw Texas, Nevada, Florida was definitely in there, which, I'm sure we would both disagree with. I mean, look, people are moving down there. There's a difference between a number being high in Florida than a number being high in the Midwest.
Yes.
Right? Just because,
Sure.
look, everybody's leaving the Midwest and the northern states and going down to Florida.
Yeah, it's
So
supply
they
and
can't keep
demand.
up with the demand.
Yeah, exactly. I think 400 people, might be an old stat, meaning like a couple months, but I saw 400 people a day move to Florida. That's insane.
Gosh. Yeah.
Just because of, the lack of restrictions in terms of COVID, which was the ultimate cataclysmic
what did
event
it
that
mostly,
triggered
but
everybody to go to
yeah.
Florida in the first place. The benefits with the taxes, no state income tax.
People are still working at home, so you have
Yeah.
these companies that might have had businesses in Manhattan or in a blue state. Their taxes are way too high.
Yep.
So ultimately, they say, you know what? I'm going to allow 50% of our workforce to work from home.
Yeah.
And I'm going to move our headquarters to Austin, Texas, or to
Yep.
Tampa.
Why not?
And I'm going to pay We're going to pay less state tax, and we don't have to have as big of a building in New York City.
Yeah. I want to go back to what you said about overvalued, because that to me is kind of like a trigger word. Overvalue would mean there's no basis to what they're valuing the property at. When, like you and I agree that we disagree with what they said, there is a value to that because it's the supply and the demand.
Right.
In terms of, hoping that homes will sell for what they're worth, there's a lot of buffer and a lot of insulation around the appraisals. Like when we were talking to Justin, they still have Justin
Sure.
Davis in our previous podcast. There hasn't been too many inflated appraisals that I've seen. Because in order to have an inflated appraisal, I use that because I don't have another term to say to describe the inflation, an exaggerated price, you'd have to buy it cash, right?
Correct.
I have seen many appraisals come in under what my mortgage buyers were willing to pay. So there's still a buffer, there's still a protection. Unfortunately, that's where it kind of hurts the mortgage buyer, because if you have cash, they're going to lose.
For sure.
It's just, so that's why it's kind of like a frustrating event, this tax hike, because people who need the loan, or obviously people who don't have a surplus of capital, are the ones that are affected. Where it's, I also was experiencing more cash buyers in terms of out-of-state people. So these are like hedge fund buyers that I speak of, who have a surplus, like they have $10 million in their account that they have to funnel around and buy property. Then they beat out, the smaller investor that has to mortgage or get an FHA or a conventional loan. It's kind of like, it's not fair. I would hope that the government or the Fed, who dictates the price of the rates, would try to promote the smaller guy being able to buy more investments and create more passive income, versus just giving the advantage to the hedge fund guy who just come in and just drop $200K left and right 3 times a month. You know what I mean?
Right.
You see who's affected there?
Yeah.
Yeah.
No doubt. And I think that, from an investor perspective, I was just looking at that. We looked at that 4-unit in Beaver.
Yeah.
And for no rhyme or reason, there hasn't been any comps. So I actually had, I went on to Zillow and I did my due diligence looking at other multi-units that have sold in that market that were similar. 4 units, 1 bedroom each. Obviously the location was prime, being that it's right near the courthouse.
Yeah.
The problem is that there hasn't been a multi-unit sold. There's been like a handful over the last 2 years, because people just hold on to property in Beaver.
Well,
They'll just cash
they made
out
a
of them.
shit ton on the appreciation. They're going to cash out there probably multiple times.
Right.
Yeah.
So you could do the cash outs, and the rent is so good there. It's the best area that you could be in Beaver County.
Yeah.
So ultimately, it makes sense. Now, that person listed their property at $300,000. There were 4
Overpriced. There's an overvalue there.
over definitely. That was inflated. So
Yeah.
you walk in, there's crumbling ceiling. The layout of it could have been beautiful.
Yeah.
High ceilings, but there needed to be so much work. Probably $100,000 needed to go.
It
into
was
that
worth
place.
150.
Yeah, that's
Yeah.
probably at best 200. But somebody bought it.
Is it under contract? I didn't look.
It was under contract later on that week. And and maybe that's testament to me, but I can't do that. And I look at the comps, and it's like even in the current condition that it's in, where everything needed to be ripped out, and you needed to rehab 4 units,
Yeah.
and then you had the life expectancy and the mechanics of every single furnace and AC unit. Those were 16 years old across the board. There
the
was some
roof.
water coming into the basement. The roof was 20 years old. Across the board, it just didn't make sense. So you have people that yet still will chase, and then they're going to be exposed.
Yeah.
They can be.
That was
Unless you're planning on just holding it, you don't care if that property appreciates.
Unless they're like owner
depends what you're trying to do
occupant.
with it.
Yeah, it all depends. But in terms of like your situation where you buy for cash flow, it just didn't make sense to buy at that price.
Right. Now, and that was the other factor. The rents were, they were charging
Peanuts.
$550 a month. Those should be close to $900
Yeah,
a month.
they're barely covering the taxes on that property.
Barely. I think the property as is was making like $300 a month if you're doing the 20% down, all of that. So you have to put all the money into it to be able to get the higher rents. So you can't rent it as is.
Yeah, that was a bad idea. If someone's paid $300,000 for that, we'll see if it closes.
Right. If you just compare it to the comps, it just doesn't. You can't
From an
justify it.
income approach or a sales comparison
Right,
approach.
because that's what it is. I mean, you're only going to be able to, if you fix that property up and sell it, what are you going to sell it for? You sell it, you have to sell it based off of what you're getting in rents.
Yeah.
If you're not getting, premium rents for that. I mean, the rents are what's going to dictate an investor to want to buy it. At least they should.
Oh,
Obviously
absolutely.
Not in this past case, but.
Yeah.
So, like from a flip perspective, I know we were just looking at we were just looking at that property in Lawrenceville.
Yeah.
I know you went
On
and looked at
Wolfslayer.
that. So, have you seen? Do you feel more comfortable buying and flipping right now? Or?
I'm not worried about flipping. It's all a numbers game. Kind of like how you approach things, how you're not afraid to still buy a multi-unit in this property. It's all, does 1 + 1 = 2? Yeah. Okay, then let's go for it. I've never bought a property that's a flip on the MLS, that's listed with a realtor. It's always been off market.
Right.
So, I mean, I feel like I'm beating a dead horse, but everyone's trying to list their property higher. Distressed properties included. This was a distressed property in terms of the condition. It wasn't distressed in terms of the ownership. It was a private owner. You can see they attempted to do a few things. I don't know the situation. They put a few new windows in it.
Money or something.
Yeah, they did the demo job. It was completely, stripped down to the studs, literally. No electrical, no plumbing. There was no HVAC, no ductwork. Needed everything. It probably needed about $150K. They were asking $129. In order for you to have a margin or for this year-long project to be worth anyone's time, it would have to have been purchased for $60K. I mean, at the most, it'll be worth $300,000.
You think after it's done, it's going to be?
Yeah, like $300, only because it's a desirable location. And there's not even a parking spot.
Yeah.
It's just. They were asking $129. In my opinion, as an investor, I wouldn't make an offer unless they accepted $60,000.
Yeah.
But then the time to hold it and fix it, I mean, it's not a quick turnaround. And the price of material, like we were talking to the contractor that was there, and the price of material is up exponentially. He doesn't see it coming down anytime soon. His words, not mine.
Right.
So it's really like a sticky situation there. The sticky situation is the asking price. And the reason I brought up the off-market is because people who are off-market, not listed with an agent, are usually more motivated. It's kind of like against my religion.
I think you got the hard money route with that, though, right? Unless you're buying it cash.
I would.
I don't know if
I don't like tying up my liquid too much,
Right.
because I could use it for other things. So if the spread makes sense where I can borrow at X%.
Are they increasing their rates right now?
That's a great question. I just thought about that as I was saying it. I could
Yeah, I
check
wonder
it.
if a hard money lender is going to increase
I would
their rates
assume
based on that.
because they're almost the same now.
It's the same thing.
Yeah,
Right.
they're almost
Right.
the same amount.
Right.
When we were exploring the hard money route about a year and a half ago, I think it was 9%.
It was.
Remember
It was
it was
about that,
9.
yeah. So that's interesting to think of.
Let me see. Average hard money loan rate, 11 to 13%. So they're up too, which makes sense.
Yeah, it makes sense.
Yeah.
Right, because they have, there's risk on their end too.
Yeah, but when we were looking at that one broker who did it, we weren't going to a private money. We were going to hard money. The origination fee was extremely high.
It was.
We had to literally rent the money plus 11% interest. Like, it was crazy.
Right.
Like, maybe we should just be hard money lenders.
I know. I don't know that I could sit back and not
No,
and
you
not speak up. I'd have to get involved in some way, shape, or form.
Yeah, for sure. I don't know how they
It's
do
extremely passive. I mean, if you have enough liquid and you want to sit there and debate it, but I also don't trust a lot of people as well.
it. Yeah, same.
You have to really vet out.
I would have to
people.
be on the deed, something that would give me comfort.
Yeah.
Like, I could foreclose on you, but then it's almost like an eviction process.
Right.
You have to go through the court channels to foreclose on somebody. You have to file, give them a right amount of time. So it's just a different way to, I guess, get a return. I don't know.
Yeah.
I've never explored that route. But yeah, in terms of the short answer, was that a good investment? Not at 129.9. The flip.
The flip wasn't.
Yeah.
Yeah, there's a lot of things that are like that. I do see an uptick. I have over the few days, but it's still, the pricing is still like at least on the MLS.
Yeah.
I get excited anytime I see like Anna Marie DeFrank showing up in my email. I'm like, oh, let me see where it is. Like, please be in Bellevue.
The
Please be
multi-unit, greater, in all caps.
Just as Greater Pittsburgh.
Yeah.
Yeah, right. I don't get annoyed by those ones. The ones in Florida. That was like this couple days. I'm like, oh my gosh. And then you were like, Mike, did I piss you off? Like I just saw you disabled my emails. And I'm like, no, you didn't. But there's so many emails that are coming in.
I have a couple people on the Florida auto email, and I have to fix it because I'm getting anxiety now because it's like every hour on the hour, it's like a listing. It's too much.
Right.
It's like overwhelming.
Which is crazy because now, granted, it's a totally different market, but
yeah,
the inventory. Well, I don't even want to say that because the inventory still along those beaches is still very low.
Yeah, turnover rate for that's the really desirable part. Is low. They're still high. I'll be in Destin end of May helping an investor, a cash buyer, do an exchange and buy something, a multi-unit down there. So I haven't explored the Florida investor market yet.
Still not a ton even in debt. I mean, they'll pop up and then they'll go.
Yeah. So I got to be there in the trenches.
You got to be there and just
running around.
Right.
Oh my God. My experience when I was in Tampa a couple months ago is I showed my buyer this house that was gorgeous for her, like an Airbnb intention. It was under contract before I got to my hotel. That was the most frustrating part.
Yeah.
And the underappraising.
Yeah.
Which appraisers are still.
Oh, that was the one that went under contract at like $650.
Yeah, that one underappraised by $144,000. But the one I was talking about, the first one she wanted to make an offer on, and went under contract before I could put my finger on my laptop. You know what I mean? That was annoying, but.
Right, now look at how things have changed, even just in a couple months.
I know.
Be interesting to see how it is down there, though. I haven't put an offer on anything in a while. Well,
it was like a month and a half.
Yeah, whenever it was, and I'd be curious to see how things are now.
Yeah.
How competitive they are. Because before, I used to tell people this all the time. Like, I'm sure you know from my offers, I never bought a property, like an investment property, without asking for some sort of assist. Because I want to keep as much liquid as I can.
Yeah.
Now, forget it. You have to go over the aspects. Forget asking for any assist whatsoever.
Even like prior to 2020, I mean, you could offer $10,000 less and you'd be considered.
For sure. Right. You could offer $10,000 less and ask for some assist.
Yeah.
Just it becomes a numbers game there. But
yeah.
I don't know. I don't know when things are going to take a turn. But again, I think that I'm still not deterred. As long as the rents make sense and I'm still making that 30 to 40% cash on cash, or there's value add based on the price point that I get it at,
right,
I'm all for it. But I think that it's just, I still, based on that, like for example, like that one that's a 300, there was definitely value adds there, but the goal is to add value and then take your money out of it.
Mm-hmm.
My issue is that I don't know if it would appraise as is, let alone if I put 50 grand into it and now I need it to appraise it for something. It's probably not. The comps don't justify it. So now my money, I have even more money tied into that property.
That just resonated with me. That's an interesting perspective.
Because you're stuck then. I mean, who knows what? Because if the value of the property isn't meeting that mark now, I don't think it's going to meet it in 5 years from now. I don't care what the market looks like.
Yeah, unless
you know?
there's a rate drop.
Unless there's another rate drop,
Yeah.
which I don't know if that. I think it's going to probably just stabilize around here. I don't know where they're at. I think Dustin said that he thinks that it's going to. He didn't think it was going to go beyond like 7s, which is crazy. It's crazy to think like that's a high
I've never
number.
seen it that high. I've been in this 10 years. I've never seen a 7% interest rate. This is the highest I've seen it since I started.
Well, they were virtually. It was like flat. They were really low.
They were very
during,
flat.
you
Yeah,
know,
it was when I started real estate
Obama years.
in 2013. They were about 4 or 5
Yeah.
for like years, and then COVID, and then rate drop, and then refi, boom, you know,
Yeah.
and then now they're back up to 6, which I think is just rude. I don't think it should be that high.
I didn't think that. That's crazy that was 6. You just pulled that up.
Yeah, 6.1 today.
Oh my gosh! I wonder what investment is.
Uh,
Again, even if
look-
it is high. I mean, I was paying around 6 when I first started for investment, but it's crazy to me to think that
let's see.
you have to go to non-owner occupied.
Oh, you've looked this up before. Maybe what I'm typing is too convoluted. It's not really giving. It's 5.162.
That sounds about right.
Yeah.
I wonder if who knows if you have to buy points though with that. Or is
Yeah,
that prime?
which I haven't seen that in a while. I
You
haven't
said
seen
5.6
5.162.
5.162.
Mhm.
Again, I think that obviously that makes a difference in the price, especially if it's like for a second home. You're paying that, and
Oh,
if it's
yeah.
a higher amount, you could be paying another $500 a month.
Yeah.
But in the grand scheme of things, again, like I always preach,
Well-
right property, right market, right price. It's gonna.
Yeah,
By
it's
your
all a
access.
numbers game. It's going to what I'm referring to as stabilize. So if the interest rates are higher, then the prices that people are asking for the real estate are going to have to come down to like a realistic number for it to sell as quick as it did.
Right.
Because the demand is still there, the buying power isn't.
Right.
So how do you correct that? You lower your asking price.
Are you gonna recommend that any of your sellers lower their ask price?
We did do a price
Oh,
drop.
you did do a drop.
Yeah.
How many, do you have quite a few listings right now, or
I have about 14.
okay?
Yeah, but
And they're
some
still
of them are difficult. Some of them just like empty lots or commercial buildings.
those are
Those
right,
are
those
a whole.
different, yeah.
That's a different animal.
Right,
But in
those
terms
sit.
of like owner occupied listings, those have all been under contract. Those usually go like that. You know what I mean?
right.
So when it was 5 days and I got nothing in my email. That's when I was like,
What
oh.
about like more depressed markets? Is it the same? Does it matter still? Like, are they, for example, you have something in Pittsburgh, like in Wexford, is that still selling fairly quickly compared to like Newcastle? Or,
Okay, that's a great point. Normally, the higher income areas, they don't really get as affected as the lower income area because the people in the lower income areas
Right.
need the assist. They need the buying power. Like someone who's only
Right.
pre-qualified for $100,000, and now you tell them, well, you can only afford monthly 70. That's gonna really,
based on the
really.
rates going up. Yeah,
Yep.
that's a huge difference.
That's a huge difference in the size of the home,
Right.
the condition of the
You might not even
home.
get approved at that point.
It might be too much expenditure. It might be too expensive,
Mm-hmm.
for them to put money down and start paying monthly. It's,
Right.
that's where it kind of like tugs at my heartstrings because I'm like, oh, you just took away the opportunity for someone to have home ownership in that under $100,000 price point. It doesn't affect people
Yeah.
who can afford an $800,000 house.
Right.
It
It doesn't.
They can afford to spend an extra $1,000 a month. You know what I mean?
Right. They definitely can. Yeah.
Mm-hmm.
No, I agree with you. It's definitely unfortunate for people that are trying to buy their first house, but
Yeah.
in the grand scheme of things,
That's where like
Using
grants
rates-
come in.
what's that?
Like they'll come up with a new loan product, I'm sure, because when I first started in 2013, interest rates were like 5-ish. They had a PFHA grant where I don't know if we talked about this for the lower income households, or if I mentioned it on this podcast. They would give them like $10,000 for a down payment and closing costs to promote staying in the home over the course of 10 years. And they didn't have to pay it back
okay.
unless they moved within the 10 years.
Yeah.
So they were able to buy the house. $10,000 for someone who only can afford $100,000 for a house that's huge.
Yeah.
You know?
Yeah, that's big.
So I don't know if they're going to come out with more grants or some type of stimulus to make it more affordable for those people.
Right.
Because that's the group that's getting, the disenfranchised right now.
It's a great point because, like
Yeah.
I've said, rates don't deter me from
Yeah.
buying a property.
Right.
Because I'm buying a property with the intent of making money on it and gaining a return. I'm basing it based on the numbers.
Yeah.
Whereas, somebody that's, lower middle class or lower class that's trying to finance their first property.
Yeah.
That could be, that extra $150 a month. That could be
Make
the
or
difference in
break them.
being
With
wanting to
gas?
buy it or not.
I mean, gas, from $2 to $3 a gallon is huge.
Yeah.
It affects
huge.
them,
$3 a gallon. You mean over $4?
Yeah, I mean, in my car, premium is like $5.
You get a
I was in
premium.
LA. I spent $7 a gallon on gas.
Oh my gosh, that's insane.
I was like, who do I think I am? Like, I need to get stop doing this.
Better get a Toyota.
Yeah, right, or a Prius.
Yeah.
That is same thing. Toyota Prius.
It is. Yeah.
But yeah, so we'll probably see some modifications and grants and things like that. What else with that? It's just either they need to increase how much people get paid just to parallel
that's not
how the cost of everything. But it's not gonna happen. But
or they'll just reduce head count. It's a funny thing because when wages,
it's like a merry-go-round.
everyone wants the minimum wages to go up. I'm not getting political here.
Oh boy.
Everyone wants the wages to go up, and it's like, okay, yeah, you could raise minimum wage, but if you raise minimum wage, guess what? What have you noticed whenever you go into Sheetz, Home Depot, Walmart, any of these stores? There's a zillion kiosks now.
Yes.
So they just they're paying
Automated.
$15, $16, $17, $18 an hour.
Yeah.
But guess what? They just laid off.
Eliminated.
Yeah, they
John
eliminated
Eagle.
half their jobs.
I haven't had a cashier ring me out
I
in
hate-
5 years.
I hate scanning or having to check myself out. I don't care where it is. I hate it. I would much rather them pay something else. But
Yeah.
all they do is they increase their prices a little
Yeah.
bit, and then they eliminate jobs, which is unfortunate.
I think it's
you
just
know?
an age-old problem. We're not going to find the answer here, but
No, yeah, we're not finding the answer. So now you figure they eliminated jobs,
Yeah.
and so now you have people that might not be getting as good of a paying job as they did, and you're adding on to it, that they can't finance their own house because the cost of everything else went up.
it's a catch-22 because now it's like, and I'm not like if they're renting and the goal was home ownership. That's like a huge milestone for anyone. Now they're stuck in their rental, and now their rents are going up. So it's like, well, I wanted my milestone, my goal, my freedom to have home ownership. It's too expensive for me now. So now I'm paying rent every month. I'm gaining no equity. It's kind of like essentially I'm throwing it away. I mean, you know what I mean? In terms of not because we're both landlords.
Yeah,
I
right.
get it, but I'm saying they're not. Just they don't.
No,
have,
I agree with
yeah.
you. And I always encourage, like one of my favorite parts about being a landlord is whenever a tenant comes to me and says, I'm buying a house. I'm so excited for them. I couldn't be happier for them because, I'll fill that apartment.
Of
That's not
course,
what it is.
yeah.
But at the end of the day, it's very rewarding and fulfilling seeing somebody
To be the launch pad for them.
Absolutely, right? Because the lenders will call me. They'll ask if they paid their rent on time, what type of tenant they've been. They take care of the place, like X, Y, and Z.
Yeah.
And it's very rewarding and fulfilling seeing people do that. So now, obviously, seeing people might not be able to afford that, it's unfortunate. And rent across the board has gone up too.
Oh,
and
yeah.
I try to be very fair.
Yeah.
If any of my tenants were to listen to this, I'm sure they could testify to that. I don't raise people's rents.
I haven't
just
raised
don't.
my
If they're a good tenant,
rent.
if you're an asshole to me and you treat me unfairly, then you might
Yeah.
get a little bit of a nudge. But
You might just get market value instead
you
of
might just
the
get
Michael
market-
rate.
Yeah, right.
No, I mean, even like, some of my tenants had issues paying on time. I've never, I'll be like, oh, don't worry about the late fee. Like, if they're on time normally. You know what I mean? Like,
Right.
I'm not out to, cash in on your late fees. I definitely work with them as well. I've tried
You
to.
said cash. Cash. Cash.
That was a unintentional pun, but I guess I'm subconsciously witty. But, yeah, it's just I've approached them and like, hey, do you want to buy this house? Like, just I'll
Yeah,
get my cash
right.
faster and go do something else with it. But I get along with all my tenants,
Yeah.
so I don't want to say being a landlord's bad in any way. I think it's a great thing, but in terms of everyone should have a chance to buy something if they want to.
Right.
You don't want to be a homeowner, who cares? That's fine.
Right.
But someone who maybe would have been in the process of purchasing a home with me, getting out of the rental situation and then couldn't because rates, they didn't lock in their rate, and now it's like 3 points higher. That's a shame.
Yeah.
So that's America today. But yeah, we're about at the end of this episode. So thank you guys for watching. And as always, check us out at cashed_in. Send us questions. We'd love to talk about or answer them. If you have any suggestions for a guest, please mention that as well. So see you next time.